All right, guys. Hello. Happy Wednesday. Welcome back. Wednesday Night Live, where we're discussing your real estate and mortgage questions. Tonight, we have a new guest. I have feedback coming in my ear here. Sorry about that. We have a new guest, Lizzie Hofer Irvine. Are we saying Irvine? Another YouTuber out there, mortgage professional, number one female loan officer in the country. Is that right?
Yeah, it had been for the last couple years. It looks like some other ladies have me beat this year.
Well, you got to step it up. We got to get some of these people on here to reach out, get those numbers up. But anyway, thanks for joining. Thanks for joining me and being here. Actually, I don't know if you know this, but I did a survey on my YouTube page. I don't know, maybe less than a month ago, and asked who I should do a collaboration with. And you were one of the names that popped up a handful of times. So here we are a couple of weeks later.
Well, that is an honor. I'm so new to this community, but I'm so pumped and I love doing these lives. And honestly, this is like super creepy and geeky because, I reached out to you on Instagram, but I've been following your channel for a long time. So this was super awesome that you reached out.
No, awesome. I'm glad you're here. I think you can provide a lot of, good information. I mean, the channel is all about educating home buyers, home sellers, guiding them through the process, empowering them, helping them get through, what, I mean, I don't know. I mean, you've been in the business since 2002, about the same time I came in. Craziest market you've seen?
This is definitely the most difficult market I've ever worked in, for sure. But I started in the business in 2002, so I did get to see, the original boom. But like nothing like I'm feeling now. And it's probably just because I wasn't in sales at that point. I was just in support, but yeah, it is tough out there for sure.
No, absolutely. So we're gonna do what we normally do here, and we're gonna address some questions. If you guys are watching, say hello to Lizzie, say what's up, let us know where you're watching from, and more importantly, put your questions out there. Right? I mean, that's why we're here. We want to help. We want to guide you guys through the process. Want to make difficult questions easy if we can, and really make sense of this stuff. So. We do have Jennifer Lego, one of our moderators in the chat. So she's going to help us out here a little bit tonight, Lizzie, as well. I've got beeping going off and all over the place here. So I'm trying to figure out what is going on. I took a week off and now I can't figure out what I'm doing. All right. So let's start up here at the top. As you guys know, kind of answer questions in the order they come in, and we might get a little bit of sidetracked. But so somebody asked me here about inventory in Orange County. So Surf City is actually Huntington Beach. And so asking about uptick in inventory, actually I ran the numbers prior to coming on tonight just because I thought this question might come up. In fact, inventory's gone down. We are seeing more property come to the market, but demand has remained very strong. And so the inventory numbers aren't building. In fact, here in my local market, 200,000+ people in Huntington Beach. And I think we had 120 active properties on the market. So that's condos, single families, 120. Single families were around 83. And then Orange County as a whole, 3.3 million people, there were only 2,100 homes on the market. So not really going anywhere. What are you seeing in your neck of the woods there in Phoenix? I guess I didn't mention that when she came on. She's in the Phoenix market, which is one of the hottest markets in the country. As if you're following anything with regards to real estate, I know you probably don't know the numbers exactly, but what are you seeing as far as inventory and all that good stuff?
So I don't know the numbers exactly, but I did actually talk to Tina Tambor, who runs all the stats for the Cromford Report, which is who keeps the data for real estate. And what she was saying is that demand has actually slowly declined month over month since December, but it's like not noticeable because when we're going to a 500% increase to 400%, you just don't really feel those kinds of shifts. And so, I mean, we still have a tremendous amount of demand. For the last couple of weeks, though, we started seeing supply actually increase, though, for us, which was nice. Last week, it seemed to level off. So who knows? When we go into the summertime, historically, because it's so hot here, people tend to not list their homes as much, or they, the buyer pool kind of slows down. I don't know if we're going to follow historical averages, but I mean, it is still insanely competitive here.
No, and it's funny. I actually get the Cromford report from an agent in your market. That's a buddy of mine, and he sends it to me and kind of broke it down. And one thing he did mention was that inventory was starting to build a little bit, and he broke it down in a way that it's basically affordability, right? There's just less buyers able to afford the prices that are coming out now. Therefore, properties starting, more properties are adding on the market just because the buyer demand is backed off, because it's not a lack of buyer demand. It's just a lack of people being able to afford homes at those prices.
Yeah. I mean, I think that's actually the biggest threat to the housing market in total. Like, it doesn't matter where you are, it's affordability. Recently they just came out with different numbers for the average median income. We used to think it was around 72. It turns out it's 79,000. But even then, I mean, like in our market, that's basically what the average person can purchase right now is like $350,000.
Right.
Like when you consider that homes are being listed for $350,000, and then people are having to pay appraisal guarantees or bidding way over asking. I mean, we're getting into thresholds that the average person can't afford the average house in places like Arizona, which are supposed to be super affordable. And so it's interesting. And like, I know I don't want to get too deep into this because, guys, we could go like a million miles an hour on interest rates. But the biggest topic in the news today was inflation. And it's been such a hot topic. But today we actually saw the Treasury auctions, and we had like a 1/4 point bump in rates. And that typically, like, you see that and you see, okay, home prices are going up. If interest rates go up, we lose about 3 to 5% of people's buying powers with every 0.5%.
Right.
So it's interesting to see how that's going to impact supply. I'm thinking by the end of the year, it'll be a lot more buyer friendly, but who knows?
All right. Well, we are going to talk about rates as we go through this, because I'm sure we're going to get some questions as we go on. We have Ellie here saying she loves content. I don't know if you love Lizzie's content or mine, but if you don't follow Lizzie, you should. Her, she covers same thing I do, but probably in a more delicate form. But she talks about lending and buying and, basically, around finance tips, right? Things that can help you financially and what have you. So if you click on her name in the description, it'll take you to our channel. You should subscribe. And we can talk more about that here shortly. So we got some people here. I'm trying to find some questions here for us. So Dar was here. Will my loan approval reflect the current market, or will I be stuck with an amount that won't cover anything because of the high prices? So what are we talking about as far as a loan approval goes, Lizzie? How long is something like this good for in a market where home prices are appreciating at a rapid pace?
So your pre-approval is actually dictated by your debt to income ratio. So the amount that you make and the amount that you actually owe. So if you're unhappy with your pre-approval amount, the two variables there, truthfully, are minimize your debt or figure out ways to get higher income. A pre-approval typically stays good for about 90 days and then 30 days after that to close your loan. So 120 days in total. But it does not shift based on where the home prices are. I mean, you qualify for whatever loan amount you qualify for. And I forgot to mention the other variable, truthfully, is down payment. So you can also increase your down payment to bring down your loan. So those are all the things that you can do.
No, good stuff. We got some normals to my channel, some regulars rather, saying Lizzie's awesome, and somebody that Gabby saying she doesn't have to switch back and forth between live streams. So, yeah, normally I think Lizzie does a live stream at 6 this
on
time.
Wednesdays.
So we get you from 5 to 6, and then you guys all leave and go to her. So Joe has a question here. He's asking, what do lenders want to see with regards to requirements for self-employment?
So this is a little bit more aggressive with COVID, just because stability of employment got a little bit wonky there. So here's what we're looking for right now. Okay, so we're looking for the most recent 2 years tax returns, both personal and federal, 3 months worth of business bank statements, and we're looking for your year-to-date profit and loss, and we want to make sure that it covers the last 3 months. And if you haven't filed 2020 taxes, we're going to want to see year-to-date profit and loss for 2020 as well.
All right, there you go. Good stuff. So John is waiting for a collab between you and Javier, or me and Javier, or all three of us. I'm not sure which he's asking for. Let's see here. Going through some questions. All right, here's a good one. So Michael's asking, how fast does the mortgage rates change in response to the 10-year treasury rate? So if the 10-year adjusts, how quickly does it reflect on rate sheets, what you actually see in the pricing that you're passing along to consumers?
So the 10-year treasury note is a security that trades in parallel to what happens with mortgage bonds, mortgage-backed securities. So the 10-year note actually has nothing to do with mortgage rates. It's just coincidental that they trade similarly because they're similar type investments. So the answer is nothing. But in general, mortgage-backed security prices change throughout the day and interest rates change throughout the day.
Got it. And so as they change, how I mean, I know the answer, but how quickly are you seeing that change on your side in how you respond to your clients as far as lock-in rates?
So it depends on how dramatic the change. So, we started, I think there's like a 40 basis point change between yesterday to today. That equates to about 1/4%. We'll price out at the very beginning of the day. And typically if there isn't a noticeable change in rates, so, anything that's going to move the market, like, more than 10 basis points, they typically don't reprice. But it is pretty immediate. If we see changes, it's immediate.
Right. And that's why it's important, guys. If you're in this market, you're checking with your loan officer, you're checking with your lender with regards to rates when you're making offers, right? Because things are changing on a daily basis. If you got pre-approved a month ago and you're writing offers today, it's, you should be talking to your loan officer, your mortgage professional, and having that conversation saying, okay, I'm getting ready to write an offer, or I wrote an offer at X. What's my payment? Where am I? Because the last thing you want to do is get an offer accepted and rates have changed, say 1/4% or whatever. Maybe you still qualify. Hopefully you still qualify, but maybe the payment's higher than what you're comfortable with. And so it's always good. Again, I mean, Lizzie probably doesn't want people calling her all day long doing this, but from a real estate perspective, you want to make sure you have, as a client, you want to make sure you have up-to-date numbers and you're on the same page when making offers, because things are changing very, very quickly in this environment. So
my personal rule of thumb, truthfully, guys, is I have a qualification rate that I give most clients, typically 1/4% higher than where market rates are at because of volatility. We might bump up a quarter today and be down tomorrow. It's really hard to say. And I've been doing this a lot since the beginning of the year. We'll always lock you in at wherever current market is, but this way there isn't a lot of panic, right? Because you might be making an offer at 9 p.m. on a Friday night and might not be able to reach your loan officer. Make sure that you've discussed numbers that are conservative. Don't try to go for lowest rate. You want to know what's available, but you want to budget on worst case scenario.
Right. So while we're talking about lowest rate, let's talk a minute about that. So a lot of people out there are always shopping for the best rate, right? Taking the expert or the mortgage professional and not really considering what they have to offer versus, say, the call center, right? I'm gonna take a minute here and bag on the call centers, because there's a reason that your top female loan officer, or were for a number of years, and you're still in the top 25, right? You're an expert, you do a good job. Why should they work with an expert, right? I'm going to put you on the spot versus, say, the call center. What are you offering to your clients that they can't offer?
So there are a variety of reasons why I would use somebody that is experienced versus somebody on a call center. So just so you guys know, there's 400 set of rules that we have to memorize per each agency. So for every different type of loan. And you can talk to someone and think that you're qualified and find out in underwriting that you're not, or that you needed a whole bunch of extra documents that you packed away. And so just for the peace of mind aspect, you want to deal with somebody who is strategic. But number two, there's a million different ways to qualify a loan, right? And how do you know that the loan that you called in for is the right way to structure your deal? There's lots of times where I've had people be like, okay, I want to put down exactly this amount. And I'm like, okay, well, why exactly this amount? Well, I was told I didn't want any more than this loan amount to get this payment. And it's like, well, okay, well, there's a couple of things that we can do here. We can buy out mortgage insurance. We can buy down interest rates. We can maybe shorten the term. I mean, there's a variety of different things that we can do from a loan officer's perspective, if they're seasoned with how to structure your deal and then how to qualify you appropriately.
No, absolutely. And I think you nailed it without, saying it directly. And it's the experts, the experienced people ask the right questions, right? They're asking the right questions up front and not waiting until it becomes a problem or waiting until, shit hits the fan, if I can say that, and then trying to figure out the problem and working backwards, right? That's a reason that I refer my clients to somebody, specifically, because I know that when I do, it's going to get done. I know that they're the expert. They're getting the job done. Whereas if they're going to someone that's outside of that, I'm calling that lender to ask the right questions as a real estate professional. I'm doing my due diligence on my side just to make sure my sellers or whoever it is I'm representing aren't going to end up, regretting that buyer because they didn't go through the proper steps and have an expert and what have you. So anyway, I'll step off my pedestal now. All right. Let's see here. So Raymond has a question. If buyers are waiving everything in the contract, then why not advise your buyers to simply dump the agent and negotiate directly themselves? So here's the deal. You could always go directly to the agent and negotiate yourself. You don't need a buyer's agent, right? I mean, that's one of the things about being a buyer is that you have the opportunity to have your own representation and or go to the seller and have their agent represent you. But think about that for a moment, right? So think about the fact that you just essentially gave up your agent, the one that's there dedicated directly to you, that is willing to work for you, and you're not paying them anything, right? Their fee is essentially being paid by the seller. And so giving that up to go and work with an agent who was hired by the seller. Now, in some states that's not allowed. Dual agency is allowed here in Southern California. I think it's allowed in Arizona as well. And, you're essentially putting, your faith that the person that is hired by the seller is going to negotiate just as well for you as they are for the seller. In some cases they will, right? But there's a big gray area there. There's a big problem with dual agency for many reasons. I'm not a big proponent of it, but I think you should have your own representation. I think you should have somebody that's willing to get aggressive for you, that doesn't have any idea what the seller is willing or not willing to do. Because as a listing agent, if the seller tells me, hey, I'll accept 300,000, and you come to me and you say, hey, I want to make an offer at 310,000. Well, in my head, I know that the seller's only willing to, they might be willing to take 300. And so when they're negotiating back and forth or whatever, in my head, as a listing agent, I already know what the seller may or may not be willing to take. Or say the other side, say you want to make an offer at 280, and I'm encouraging you to make a higher offer because the sellers told me they won't accept anything below that. Am I willing to negotiate just as hard for that lower price as I would in any other scenario? The answer is no. In most cases, not. And so you want somebody that's willing to get aggressive on your behalf. And so I understand in this market, it's frustrating because, you're putting in a lot of offers in most cases and not really getting the result. But, if everybody went to the listing agent would be representing so many parties and you would be in a similar position, right? So just make sure you have a professional, that professional should be asking the right questions to the listing agent on the other side, what the seller wants. But I talked about it earlier this week in a video. A lot of this market's coming down to relationships, right? If your agent's a professional, they do a good job, they know other agents in the area, that's the kind of agent you need in this market, right? You don't want the new person that just got their license because it's going to make that process even more difficult. Anything you want to add on that, Lizzie?
Yeah, I think that clients don't really understand all of the contingencies that are in a contract, not to mention all the timing. And all that it does when you guys waive an appraisal contingency or maybe waive an inspection contingency, it just means that you're willing to forfeit your earnest money. It doesn't mean that negotiations stop there.
Right.
I mean, I literally just and this is a real life scenario that just happened. I'm working with the buyer's agent. We waived our appraisal contingency and guaranteed a gap of $10,000. Because my client was working with a really well-seasoned buyer's agent who studied the market, knew when the pending comps were closing, right? So that we could get our appraisal done, right? We didn't do stupid things like order our appraisal on our inspection period, hoping to cancel, right? We waited out the game. We actually ordered the appraisal after those sales were done. The property actually came in at value. Our client didn't have to pay $10,000 over asking price. And he got us a long enough close of escrow where we can close on time. I mean, and in this case, if you're working with a seasoned person, they're going to limit, your penalties in this market, right? They're going to limit your exposure to losing your earnest money, to paying over asking price, to overpaying on appraisals. I mean, it's so important right now that you're getting the right professional advice, and it's not just about contingencies. It's not just about the most aggressive offer. So.
No, that's good. I mean, that well said. And that actually reminded me of something. I was recently shown a contract, an Arizona real estate purchase contract. And the craziest thing in there, you guys have this contingency that allows essentially the buyer to back out up until like 3 days before the close of escrow. Is that right? Did I read that right?
You have to have an unfulfilled loan contingency turned into them within 3 days.
So let's back up. So I get a loan, right? And for whatever or I get a loan approval. I'm going through the process. We're getting ready to close on this deal. 3 days before the close of escrow, you find out I can't get financing for whatever reason. I turn that into the seller. I'm out. I get my deposit back. I move on. Like
the contract in Arizona is written in favor of the buyer unless you've waived your finance contingency. That's how it works.
Holy cow, that's crazy.
Now, it's not to say that the seller can't contest it and can't argue it. You know what I mean? Especially if it's like the client quit their job or they didn't actively try hard enough to get their loan done, like they didn't turn in their conditions or whatever the case. I mean, we know that there are times when that won't cover a buyer. But in general, like, if we find something that disqualifies them from their home loan, I mean, they can get their earnest money back.
No, I mean, in most states, that's how it works. But in California, like we're asking for loan contingency to be removed at like day 14 of a 30-day escrow, not 3 days prior to the close of escrow. So it just, I mean,
a lot can happen though. Like, let's say you get laid off.
I get it. I mean, I understand it. I just, fortunately in my career, knock on wood, like I've never had those, once we release contingencies, we've been good, right? I mean, never had those issues. I just, in California, the contract is really mutually beneficial to both parties, right? It benefits both buyers and sellers. Whereas like you mentioned, your contract really favors the sellers in that case. So just interesting. No, absolutely. All right. So, I'm just reading some question here. If you see something you like, ask it. Let's see here.
Honey Bun says that she's scared. I hope not of me.
Yeah, Honey Buns is scared. There she goes. All right. Lizzie's really nice. She doesn't bite. And it's a lot easier when you're this far away from each other though in the camera. Let's see.
Really intense. I don't know.
All right. Let's see.
Oh, Brian Harrington. Hey, dude.
Let's see. Where's Brian Harrington? All right, here we go. He's here. Seriously, watched a lot of Lizzie back when we made our first purchase back in 2019. So awesome. She's been helping buyers since 2019. Michael DeRee has a question here. So Michael comes and says, is it worth it to put a contract on a house without seeing it first? Then after you see the house, and if you don't like it, I can back out. At least you get the contract in. Yeah, but no. In fact, most agents won't accept an offer sight unseen. So that's first, right? So me as a listing agent, if I receive a contract from a buyer or an agent whose buyer and or agent hasn't seen the property, because in some cases, us as real estate agents, we're doing a virtual walkthrough for our clients who are out of the area who might be purchasing the property just through that virtual tour. I have done that many, many times, but usually I'm letting the agent on the other side know, like, hey, I'm going to go show the property, but it's going to be virtual. So if we do decide to make an offer, that's the way, it's coming in from a virtual showing or what have you. In the case where people are making blind offers, I would say the majority of agents out there, the professionals out there, aren't taking those offers into consideration. And quite frankly, it's almost a waste of your time. I mean, to be writing offers on properties that you haven't seen in person, unless, for example, it's exactly what you want in maybe the neighborhood that you want to be in, so on and so forth. And you're willing to do what it takes to get that property. In that case, perhaps, but I would say for the majority of people, the answer is no on that.
I'm going to concur. Alina,
yeah. So Alina got a super chat here. Thank you, Alina. After 3 rejections, got my offer accepted and money for repairs in Atlanta without making any crazy concessions. Thanks for all the advice. So if that advice came from me, you're welcome. Thanks for the super chat. Not necessary, but appreciate it. So yeah, it's, I would say in this market, you gotta stick to your plan, right? Don't get FOMO. Don't do dumb things. I tell the story. I mean, I got one accepted the other day. It was the 20th offer, number 20. There's a lot of writing contracts, a lot of emotion, a lot of things going on, but it finally got done on the 20th offer. So just stick to it.
Yes.
All right.
Don't be afraid to put up backup offers, guys. Like
absolutely, good point.
Backup offer. I bought my first 2 homes in super aggressive sellers markets, like 2006. And then I bought in 2011 when it started getting, or 2012 when it started becoming a seller's market. I was a backup offer to both of my deals. The first person bailed and I got them.
That's actually a good point. I actually meant to mention that in a video recently because, when I was actually in Arizona, we were talking about earlier, talking to agents across the country. And one thing they said was, a few of my offers were actually accepted. We were the backup offer. The first deal fell apart for various reasons. So, Lizzie makes a great point. If you're in this market, don't be afraid to make a backup offer. In most cases, you might be one anyway, if you're in a multiple offer situation, but, just stay patient, stay true to what you're trying to accomplish and things will work out. Nicole has a question here. Can I use a bank statement loan? I have a 1099 income, W-2, where I earn about the same for each, but I have too many deductions on my 1099. Or is the bank statement loan only for self-employed only? Lizzie, I'm going to throw that your way.
So I don't claim to know every single broker's deals, but typically it is for self-employed borrowers, and you're going to need a CPA to be involved in it. I don't know. I haven't come across that scenario yet, so I'm sorry to be lame. I don't have a great answer for you.
No, I don't have the answer either, but I think with 1099 income, you're going to have to show some consistency in it, right? I mean, you're going to have some proof of it. Bank statement loans, you're going to need at least 12 months.
1099 income, and typically you have to be self-employed. Like I haven't seen one, or you have to have majority ownership of your business, consistent deposits. I don't know how they would treat W-2 income in addition to the self-employment income.
Yeah.
So that's why I'm saying I just don't have the answer for that, because all the bank statement products that I've used are strictly for self-employed borrowers.
No, there you go. So yeah, Nicole, unfortunately, I would add to that too and just say, yeah, I mean, I think, in most bank statement loans, 1099, I mean, I'm assuming your 1099 income is the same as your W-2. So there is no self-employment there. You're just getting another payment in 1099. So you would have to probably be able to use both incomes. And like she said, you're probably going you might run into some issues there, but something changes or look into it a little bit further. And I know you're a regular on here. We'll address it again. Great Core, you replied to this on your most recent video, but was curious if you would elaborate on your opinion here. Many economists claiming hyperinflation incoming think this is helping drive the market. I don't think hyperinflation is what's driving the market at the moment. I do think low interest rates coupled with low supply is really what's driving the market. If I'm being completely transparent and honest here, I don't think people are smart enough to read out to think hyperinflation is coming, and that's the reason they're buying. Now, some people are buying because of that, but most people are buying because they need a home to live in, right? I mean, they need a place to stay. A lot of people, we've talked about this, are now able to work from home. They don't have to drive into work. They can work remotely. They can go live in Arizona if they want, and take their California incomes in some ways, or their California appreciation, and go buy property in other areas. And so that's why you're really seeing the growth in a lot of these markets. It's just there's not a lot of property to choose from. As far as hyperinflation coming, hard to say, right? I mean, we've talked about it on here live with Josh, and inflation numbers are reading high now because of the way they're calculated, right? Because it's a 12-month rolling average, and you're taking off low numbers from this time last year, right? So April of last year drops off, and May comes on. Well, May was a better month than April of last year, and so this rolling average has the numbers ticking higher, which the Fed has mentioned that they're going to read high for some period of time, and likely come down by the end of the year. I think it's more of that, but you do have a lot of people that are going to be out there spending money. You're going to have supply chains that start to get back into working order. And I think, once those supply chains start to be able to produce goods, whatever those goods may be, it could be really anything. I mean, if you're here in the state of California, in Huntington Beach, you look off the coast, there's 40 or 50 big container ships out there just loaded with supply, and they can't get to the port because the lack of drivers, the lack of workers willing to unload the ports. And so once all of that, calms down, the supply chains start to build, in theory, you'll see prices probably come down a little bit, which I think, again, will help out with those inflation numbers. I'm not an economist. I have no idea how it really plays out, but that's my thoughts on it for the time being. Any thoughts that you want to throw on inflation, Lizzie?
Well, I am a guest on your channel, but
you can, hey, listen, throw your comment. Like, we can disagree. It's okay.
So I don't know if hyperinflation is a thing at the moment, but I will say that the cost of building, the cost of labor, the fact that, people have increased wages, those of people who are working because they're willing to work, and we're talking about a limited qualified pool of employees. All of that leads to rapid inflation. We're experiencing all of the signs of inflation right now. And so when you couple that with a super aggressive housing market, and you realize that the decision to purchase is emotional.
Yep.
Okay. Like, more people get into the market, the more competitive it is, regardless of logic. Like, this is just the truth. And then when the market softens, no one will want to buy, even though logically it makes so much more sense. Okay. So I think that inflation definitely leads into like all the crazy bidding wars, just in general with the psychology of money. So yes, I do think that it definitely is a factor in driving the market. Supply and demand is actually what creates markets. But we wouldn't have as aggressive of a market without the psychology of consumers. So
no, absolutely. People buy emotionally, they justify logically, right? And so that's always going to drive every market. People are going to make emotional decisions, and then likely have some buyer's remorse at some point in the future, regardless of whether it's houses or a car or, the TV that they bought last night at Costco because their other TV went out. Now they just paid a lot of money for a TV they didn't really want. Yeah.
Now, is it long-term inflation? Like, because I think that's what the Fed chairman is talking about, and what you're talking about. Is it long-term? I personally don't think so. But like, my short-term legitimately is into next year. Do you know what I mean? So everyone's present day is this.
No, I disagree, but that's okay. I think you'll see inflation numbers come back down. But it's really hard to say how it plays out, right? I mean, there's just a lot of money out there. There's a lot of money floating around. There's a lot of unknowns. And that's the problem is, people like me, a talking head on YouTube, has my opinions. And then you have 1,000 of me.
My talking head on my
yeah. And there's 1,000 people that are me, that are a lot smarter than me, saying different things. Some are agreeing, some are disagreeing. And so at the end of the day, I don't know. I just, this is my opinion, and I have I'm in my channel and I have my opinion, and I welcome yours as well. So it's all good. No, it's okay to disagree. Let's see here. So Rebecca, I'm a buyer in Phoenix. Would you be able to give me the information of the realtor that helped the person who had the 10K ?
1,000%.
Okay.
Um,
Yeah. There you go.
yeah, 1,000%. I'm going to put my email in the chat.
There you go. So email her and she can connect you with that person.
You got it.
Awesome. Let's see here. I'm going to go back up. Here's a question from Horizon Music. Is it unreasonable to expect a loan officer to be available on a Friday night if I'm putting in an offer and need a loan approval letter if they're reviewing offers on Saturday? I'll give you my thoughts or you give me your thoughts and I'll give you mine, or vice versa. It's your call.
I think that if you are like somebody at Bank of America, your call center isn't going to be available.
Correct.
I think that if you know that you're going out to look at offers, I think it's reasonable to call your loan officer and let them know ahead of time and see if they can work out some numbers, or call your real estate agent to figure out what is going to be needed. I think that's prudent. Now, am I sending out pre-quals on Friday night at 7 p.m. every weekend?
Right.
So I don't know. I don't know what's reasonable. I'm doing it.
I wouldn't say it's unreasonable, but I wouldn't say it's reasonable either. And it's not fair, right? I mean,
yeah,
in many ways, right? I mean, the thing to do, I think, if you're a buyer in this environment is for one, if your real estate agent is out showing you property, and they should be talking to the agent on the other side to find out when offers are due to begin with, and prior to the night of, in that scenario. And if they are, then they should be having that conversation to say, hey, look, if you think this is a house that you're going to like and you're going to be writing an offer, let's make sure that we have a pre-approval letter intact before that. I mean, in most of my clients, I'm getting a pre-approval letter, not up front, but somewhere in the early stages of the process, especially if I'm thinking of writing an offer. I'm trying to get, proof of funds, pre-approval letter, anything that I plan on submitting with an offer ready in a folder, so that when we're ready to make those offers, all I have to do is combine it into a PDF, my cover letter with the offer and what have you, and send it over, so that there's no guessing where things are. And to be completely honest, I mean, in most, it used to be that I would get a pre-approval letter tailored to every single offer. In this market, I'm going, hey, listen, what's the max you qualify for? Oh, 400,000. You want to write an offer at 300,000? Okay, we're going to use the $400,000 offer, because we're just going to show the seller that you are qualified, right? You're qualified for way more home than you're purchasing, because maybe that stands out in the scenario. Maybe you don't have the 20% down or the whatever. And I can say, hey, look, to the buyer's agent, to the listing agent, look, my client's well qualified. Yes, they don't have that money down, but they have a low debt to income ratio. They have high credit scores. They were approved up to 400,000. This property's only 300 or 325. There should be no issues with qualifying there. And then obviously you're having the loan officer call and follow up to that as well, so that there's some relationship, there's some rapport on the other side, and you can try to use that in your favor. But that's my 2 cents on it. Yeah. All right, Brian Hall I think the seller should be able to keep the earnest. It's a deposit. What good is a deposit? I dealt with that before. Somebody just changing their mind at the last minute and wasting someone's time. Yeah. So, the earnest money deposit there is good faith, right? It's there to open the contract, to show the seller that you're serious about it. Because if there wasn't anything, on the line, you might have people making 10 offers and going through the process with all these properties at once in some cases, and then just deciding at the end, hey, I'm not going to move forward with this one. I'm going to move forward with the other. And the other thing that comes up is, once contingencies are released, there needs to be something on the line, so that if you do back out, there's some recourse. And some states like Arizona are a little more friendly towards buyers in those cases. But what I would say, Brian, is having a professional, I say this often, on your side, whether it's a listing agent, or whoever it is representing you, making sure they're doing their due diligence up front. Now, you can't stop silly things from happening and people just backing out for no reason, but you can have somebody there asking the right questions and making sure things are moving along as they should. And in that case, hopefully that prevents any of the nonsense of people backing out.
Yeah. And in Arizona, you can't just back out. You would lose your earnest money in that case.
So you can't just change your mind? You
can't just change your mind. Yeah, you lose the earnest money. You can back out of your contract. They keep your earnest money.
Got it. So yeah, here in the state of California, you have 6 contingencies on the contract. But during that contingency period, you can really just have a change of heart and back out, and there's really nothing that's going to be done. I mean, in that case, I mean, whenever you do back out, just like I'm sure it is in Arizona, both parties have to agree to release the deposit, right? It's in escrow. They have to agree to have that money released. So that can be a fight, and go into mediation, arbitration, what have you. They don't just get the deposit like handed to them. It's got to be agreed upon. But if you wanted to fight it, you could fight it. It's one of those things. Let's see here. So Darren, $10 super chat. Thanks, Darren, for contributing. We appreciate it. I'm under contract and 3 weeks away from closing. Everything is done except for the appraisal report. It's been 10 days since it appraised, or since the appraisal, I'm assuming. Lender says he wants to fix an error. Should I be worried? So 10 days after an appraisal's been done, should he be worried, Lizzie?
1,000%.
Not what you want to hear.
But the thing is, you've got 3 weeks from closing, which means that there is enough time to fix your loan issue, but there is not an error at all that takes that much time. Now, out of curiosity, is it a VA loan? Because if it is, right, I mean, sometimes the underwriters go back and forth to make sure that it meets VA requirements before they release the appraisal report. But it shouldn't be 10 days worth of back and forth. So you definitely need to press on somebody and find out what's going on.
No, absolutely. So put that in there, Darren, and we'll address it. In some cases, I do know, like you're saying, since it was appraised, maybe the appraisal was ordered and it's been 10 days, because in some markets, I know appraisals are taking 3, 4, or 5 days to actually get appraised, and depending on when they can get in the property. No,
he's saying that the lender wants to fix an error. That typically means that the appraisal report didn't pass quality control.
Right. Yeah. So there you go. Yeah, I forgot that part. So yeah, not to worry you, but and then you will receive a copy of your appraisal, right? It's one of the things that when the appraisal goes out, you sign a release, you should receive a copy of it at some point. So as soon as it is released, in theory, you should receive a copy. Is that still how it works, Lizzie? Yeah,
you're entitled to, well, you're legally obligated to receive it 3 business days prior to your closing. My whole thing is that things aren't complicated. Okay. They're just not. 10 days is too long to fix an error. Do you know what I mean? If he hasn't turned in the report, maybe there's that, but even then, appraisers, they have a due date for when the report needs to be back, and you should be getting clear communication from your loan officer on what the issue is. Just saying, oh, he needs to fix an error is super vague, doesn't give you any information, and doesn't give you a due date for when you can expect it. And 3 weeks is literally the minimum amount of time that you have to switch lenders in case you have a real issue on your hand.
Right. Okay. So we got a little bit of updates here. It's a conventional 5% down loan. And he also said the appraisal office says they saw an error they wanted to fix. Lender probably is guessing. So, I mean, I think what you just said stands true.
Pass quality control.
Right. Yeah. You just need to, clarify what is not done correctly. Right. I mean, the fact that you have 3 weeks, still you have some time, but depending on when you're supposed to release contingencies and all that good stuff, you need, obviously this is an important piece of that puzzle. So,
and when appraisals don't pass quality control, there's a good likelihood that they're going to be more stringent in underwriting, because we want to validate, like we have the same amount of interest that you do to making sure that that property appraises. In fact, we have more so because we're putting up more skin in the game, right? The money comes from the bank. So if we see an appraisal that does not meet all of the requirements, chances are they're going to ask for a desk review, which is another professional appraiser reviewing the valuation of your home. And that means that your appraisal, that conditions for those appraisals can continue on, and you won't get a solid price for your home. So you want to make sure that those things are taken care of ASAP.
There you go. All right. Let's see. So Lorena is asking, how can I find a reliable loan officer and realtor that won't screw us over? What are the signs to look out for? So, relationships, right? I preach it all the time. If you need a good loan officer, you need a good real estate agent, reach out to me directly, right? There's a link in the description you can click on. I'll refer you to somebody in one of these markets that can guide you in the process. But, find somebody that's had a good experience, right? Your friend, family member, somebody, I preach relationships in this business for many reasons, but it's important, right? Find somebody that's done a good job for someone you know. If you don't have that person, you can reach out to me or reach out to Lizzie or someone and get that referral. But there's a lot of professionals out there that have been in the business a long time that do a good job. And so I think you should try to work with one of them versus, typing, loan officer or realtor in the internet and just clicking on the first ad that comes up, right? There's a lot of money being spent right now to market mortgage and market real estate. And that money is typically driving you to people that aren't professionals. So go where the professionals are. And that's on YouTube. No, that's not on YouTube. Reach out to one of us and we're happy to connect you to somebody that can guide you in the right direction. All right. In a new build, I assume the builder pays the realtor fees. That is correct. Typically, builder pays realtor fees, but in this environment, what we're seeing as real estate agents showing new construction properties, so a lot of these new construction companies have gotten extremely greedy and reduced real estate fees next to nothing. I don't know if you know much about that in your market, but it's happening everywhere. They're taking what was typically, somewhere between 2.5%, 3%, 4% in some cases, down to 1%, 0.5% in some of these markets, just because they know that they have, you kind of in the bag, so to speak, and that they don't necessarily have to do it in this market because they don't, they did this in the last housing crisis crash, however you want to refer to it. They did the exact same thing. When the market was hot, they reduced fees. And when the market went to crap, they jacked them up because they needed real estate agents' help. So right now they don't think I need our help. So they reduce fees. But to answer the question, you can definitely count on the builder paying something. Just to whether or not they're going to pay something that's reasonable or not is to be determined. All right. Hi, Lizzie and Jeb. Under contract in Texas, closing in about 3 weeks. If for whatever reason I don't qualify for the loan, do I get my Earnest money back? I've already been pre-approved. So thoughts on that, Lizzie?
So I don't know any Texas contract law. So honestly, I couldn't tell you. In Arizona, if you couldn't qualify unless you waived your loan contingency, you would get the money back. But I don't know Texas. I'm so sorry.
No, nor do I. But if you have your loan contingency in place, then you, in theory, should get your deposit back, right? So make sure you ask your real estate agent. Hopefully they're a professional, understands the contract, and they should be able to guide you with that question. So Lizzie, we got a question from Michelle C. directly to you. Got pre-approved for a conventional 5% down. I will be closing 4 years past a Chapter 7 BK discharge with property included and discharged. The mortgage had been reporting late. Do we get more than that? Had been reporting late. Okay.
So what did she say? So here's the obstacle on that scenario. I'm assuming that the mortgage kept reporting late after your bankruptcy. What ends up happening in this case is you're probably going to need a manual underwrite from your lender. You can get manual underwrites, guys, even non-conventional home loans, even though lots of loan officers will tell you you can't. You can, but they're stricter with debt to income ratios. So what you can do is you can actually contact the servicer for that mortgage company and send them your bankruptcy paperwork showing that the property was included, because it's technically illegal for them to report it after your bankruptcy. So you should be able to get it removed altogether. But those are the right details to get qualified for a conventional loan after a bankruptcy.
Okay, yeah. So she actually came back and said, my attorney contacted the previous lender and informed them that they have to remove all lates from my credit that took place after July of 17. If they are not removed, would I still be able to close?
Honestly, with your bankruptcy discharge paperwork, yes, you can. If you can go with somebody who is using manual underwriting, or if you get an approve eligible just through the automated system, you should be fine. So a lot of times those things report in like perpetuity. So it might have just been reporting all the way up until now, which will have an impact to your credit score, unfortunately. So you'll get worse terms. So you really do want to fight to get it removed. But most lenders can do a manual underwrite for you.
No, good stuff. Good stuff. Let's go here. So Grace is a regular here. So actually I referred Grace up to a real estate agent in Northern California, and She's under contract with a new builder. So thanks for joining us here, Grace. I actually saw Tyler last week. So with the rise of lumber pricing, are they able to change the purchase price due to these increase of lumber costs, et cetera? So that's a tricky question. What I will say, Grace, is that, we've talked about it many times. The real estate purchase agreement for a new construction company is different than those of the state of California, right? In most states, builders use their own contracts. They don't use the state contract, if you will. And those contracts are written to protect the builder, not the buyer in most cases. In theory, they should not raise price. They should honor the price that you're in contract, right? I mean, that's what should be done. I have heard, in fact, I think we had someone on here a couple of weeks ago say that they were, I think, on the East Coast somewhere, and the builder basically changed the prices of the properties because of these costs. Now, I think, because of California, because it's so litigious and everything going on, I think you're probably, going to be okay, but it's one of those things that's really hard to determine, right? I can't see these guys raising prices at this point, but nothing is I wouldn't be surprised with anything at this time. Are you noticed anything in your market, Lizzie, with any new construction or anything crazy like that?
So not in my market, but this actually made national news 2 weeks ago. So essentially, this is why it's super important to still go to a new home builder with your professional legal representation, which is your realtor, because they need to check for these types of contingencies for the builder. So here's what I read is happening. So either they're going to move out your closing date, okay, so that if they cannot solidify their cost of building and lumber, so they'll move out your closing date or your build time. They'll split the costs with you, or they'll increase the purchase price. And so a lot of builders are doing this, and it's so super important because you guys have hard earnest money on the line for these. A lot of them I've seen in Phoenix, what they're doing is they're just allowing people to get out of their contracts and returning all of their money. But I mean, it is really, really risky, and that contract 100% is not written in your favor. And again, I'm just going to really plug real estate agents. I know people have worked with ones that, aren't worth anything, but I promise you, real professionals will save you so much money in the long run.
I couldn't agree more. I like it. And that was good. That was good knowledge because, I hadn't heard that or read that. And so I will check that out tomorrow. That's it's good information to pass along. So Michelle C said thank you, and she gave me $5 for you answering the question. So this works out well. You should come on more often. Let's see here. So these questions are tough, right? So what kind of income do I need to get approved for a $650,000 loan? Unfortunately, Juan, you need credit scores, you need down payment. If you're buying a fourplex, you need the rents on that fourplex. There's a lot missing from that scenario. What I would tell you is that, go through the pre-approval process, find it out. Depending on where you are, reach out to me. I'm happy to connect you with someone that can help. If you're in Arizona, reach out to Lizzie and she can guide you through that process. But there's a lot going on there, a lot missing. And so it would be too much to ask of everyone else to go through that at the moment. What percentage of people pre-qualify and then don't qualify for a mortgage in the end? So how often are you pre-approving people? I think I probably know the answer to this, but we'll ask it anyway. And then they're not getting their loan that you told them they could get.
For me, it's rare. So for me, it's rare, but I will tell you that everybody that, at least one person has had a horrific mortgage and real estate experience. Mm-hmm. So I can tell you that I don't think that it's big that people, I don't think it's a large percentage of people that actually don't qualify, but I think I read somewhere that it's 65% of Americans have horrible mortgage experiences, which makes me super sad.
You know why that is, Lizzie? Because there's a lot of bad communications and a lot of inexperienced people out there doing, a job for a professional. So as many of you guys probably don't know this, it's really easy to get a mortgage license, at least in California. real estate license in California. In California, you can do both with one license, right? You don't need a separate license, or you do. I guess you got to be have your NMLS. But outside of that, not really a lot that needs to be done here. So you can just pass a test and start selling houses. You can start representing people with the largest financial investment they'll ever do in their entire life, with no experience. So experience, people, it's key. I mean, you don't want to go to, the doctor that well, I wouldn't say they just graduated, because they've probably done some residency, but you don't want to go to the person that just started doing their job in most cases, right? You want to have some experience building there.
The surgeon on his first surgery.
Yeah, I mean, yeah, probably not. I mean, I guess somebody's got to be that person though, right? So,
I mean, they got to start somewhere, but not with me. I'm sorry.
That's fair. I guess with real estate and that sort of thing, I mean, the entry level is working on a team, working in an environment where you're getting coaching, you're getting some experience, maybe not on a team, but in an office where you can collaborate and talk to people and really figure out the business, whereas, the other professions, you're just kind of thrown out there. But most people don't do that. They just go out and start doing loans and doing real estate. And then, you get the bad experience in those cases. All right. So Matt, the mortgage guy, do you know Matt?
I have. He's been on a couple of my lives. I really appreciate his support.
Awesome. So Matt says, high-level agent and lender giving great advice to the people. This high-level advising would be $400 an hour if we were lawyers. That's a great idea, Matt. People, it's $400. We've been on for 59 minutes. Let's go. Come on. And he said, smash the like button, folks. Let's get 100 likes, 137 people watching and 33 likes. So, hey guys, I haven't asked tonight, but if you are watching, hit the like button, subscribe. If you find value in the content, go check out Lizzie on her channel too. You can click on her name in the description below. It's really easy. And Jennifer said time to hit the like button as well. So thanks, Jennifer. Is there any tips in being competitive against cash offers when using a VA loan when trying to purchase a new home? So I'm assuming we're just talking resale. We're not necessarily saying new construction, because I think in new construction, I mean, well, either way, let's talk about this, because this is a hot topic, I think, at the moment, because your VA loans, are a benefit to those who have served in the military for some period of time, or could be a spouse. And there's some other nuances there. But more importantly, somebody served in the military and they're able to use this financing. And that's one of the benefits, right? And they're able to purchase with little to no money down as far as a down payment, no mortgage insurance. There's a lot of benefits to using VA. In fact, I've had a lot of clients over the years use them. I did a lot of loans when I was doing lending. And in this market, it's competitive, right? So these 100% loans, in some cases, well-qualified buyers, in some cases, maybe they have low debt to income ratios. Maybe they have money to put down. They're just choosing not to because they don't have to, because it's a great loan otherwise. What are you seeing in your market? Are you seeing VA loans get accepted? Even talk about FHA. What are you seeing? Or is there anything that you're seeing agents do to help set apart in this environment?
So I love VA loans, guys. I think they're actually the most competitive loan product that we have available right now. So if you qualify for it, you just have to be working with the right real estate agents and the loan officer who knows how to sell it. So now I will tell you that cash offers, while they're really, really attractive, have a high percentage of cancellations, just so you know. And they're also not paying way over asking price like other people, right? Unless the person is actually going to occupy the property. So you still have some competitive edge, even if you're competing against somebody that's all cash. And the thing that I will tell you to tell your loan officer is that oftentimes veterans have down payments and have the money to pay for closing costs. And because they have 100% financing available to them, they have the capacity to guarantee more money for appraisals, to bid over asking, and it isn't going to have an impact on their ability to purchase the property the way that if a conventional loan didn't appraise, they have to put down the overage plus their down payment. right? And it's the same on an FHA loan. So I love VA loans for this reason. The other thing that I love about a VA loan is that VA loans actually also give weight to pending listings, whereas other types of financing don't. So it is super, super, super important that you work with somebody who's educated in this. VA loans allow for higher debt to income ratios, more flexible underwriting guidelines, and the fact that you can get 100% of your loan covered for you means that you have way more flexibility than the other 76% of buyers in your marketplace.
No, absolutely. So in this market, you mentioned communicating that it's, you know, working with a professional that understands them and can I guess not, you know, kind of ad lib what you're saying here, navigate in this environment to get offers accepted. What are you seeing agents say, do in order to, you know, stand out against an offer that's maybe 20% down? I mean, is there something that you know of, or is it just having that?
The person who does 20% down is still subjected to the same appraisal contingencies, right? They may have 20% down, but like, I mean, maybe they don't qualify if you had mortgage insurance.
Right.
You know, so my thing is, I don't necessarily have my agents sell this, I sell it, right?
No, that's good.
Usually I'm getting on the phone, talking to a listing agent, overcoming all of the objections that people have about government financing. And I will also tell you this, my VA appraisals are coming in, and this is anecdotal. There's no percentages behind this. This could be just total crap based on my experience,
right.
But those seem to be coming in way more at value than conventional loans.
Interesting. No,
yeah.
I mean, it's good. I mean, I think you said a key thing there, which is having the loan officer call the listing agent on the other side, right? The buyer's making an offer. You as an agent, or you as your agent should be having your loan officer call, or vice versa, however you want to say it. But either way, the person you're getting financing from should be having a conversation with the listing agent on the other side, or at least trying to, so they can explain, you know, your financing, how well qualified, so on and so forth. No, but I think what you said there is explaining, you know, breaking, I think even what you just said, you know, the fact that you can say, hey, look, you know, my VA appraisals are coming in more often, or 100% of the time, whereas my conventional loans are 50% of the time on appraised value. You know, why wouldn't you go with somebody that, you know, is doing this with more flexible underwriting, so on and so forth? And I think people just look at the down payment, right? They look at the down payment and think, well, they're not putting any money down, so they must not be qualified. And that's why having someone on like your side to sell it is key in helping that deal come together.
For sure. And I think that the biggest thing with VA loans and FHA loans is that people have an idea that, one, they're going to be covering costs for the buyer no matter what, which is not the case with a VA loan. And two, that they're going to be more repairs requested. I will say that chipping paint is a real thing in Arizona. It's hot here. I think it might be a thing in California. That's the only required repair. But I will, unless there's like safety hazards, right? But the difference between like a conventional loan and a VA loan, and then termite damage. Right. So for you guys, like, you know, as a buyer, you don't have to put that cost onto the seller. I mean, there are so many ways to negotiate, but I will tell you guys, like, just realtors, lenders, the bar is kind of low for how you get into this industry. And so, like, listen to the way that I talk and the way that Jeb is talking, right? We're professional, we know what we're doing, and we're intense, right? You want to deal with people like us. There
you go. Well said. I love it. All right, let's see here.
She's not scared anymore.
there you go. That's awesome. Honey Buns was scared of Lizzie earlier. She's no longer scared. You've warmed her over. Is that right? Is that the way?
Won her over.
Won her over. Warmed. Where the hell did I come up with warmed her over? Anyway, I'm reading and trying to think at the same time, which clearly isn't good for me. So regarding gaps in employment, I was out of work for 6+ months and just got hired in the same line of work. How long do I have to be at my new job until I can apply for a home loan?
6 months.
Okay. So 6 months. Easy answer there. I had a question come up on a video prior to video that I shot today. I was actually commenting on some stuff as right before we came on, and the person asked a question. And so I was going to throw it out to you at the beginning, and I completely forgot. I got lost in our conversation and what have you. And they said, what are your thoughts on, going through they've been pre-approved. They're ready to go. What are their thought? What are my thoughts on paying for the inspection via credit card, the appraisal via credit card, and some of these upfront fees via credit card when going through the home buying process? And I said, my answer is have a conversation with your loan officer. If you plan on spending any money on a credit card, depending on the way, when it's reported, what have you, may affect DTI and so on and so forth. So what is your go-to answer when somebody says, hey, I want to do these things on some sort of credit? How would you respond to that?
Typically what you charge on an already open credit card that you've had established doesn't have an impact on your current qualification. Now, if you're maxing out the credit card or going over the balance and for whatever reason they have to pull your credit, it can impact your credit score and definitely increase your debt to income ratio. So generally speaking, I like to tell my people that if they can, to pay with cash. However, some people just like to get points and then they pay it off. You really do want to talk to your loan officer about it. We actually charge for appraisals at closing, unless somebody cancels.
No, good. Yeah.
Okay. I think Ricky's really concerned that we're not wearing masks.
Ricky.
Yeah, it looks like Jeb's at home and I'm in an office all by myself. So
I saw that Nightbot responded asking Ricky if he was finished.
It's been all over the place in all caps.
Yeah, and I'm trying to figure out where this came from here. So let's go back and check out Ricky. So Ricky was actually deleted by Nightbot. So bye, Ricky.
Nice. Sorry. I was just like, maybe we can just stop if he just knows why we're not wearing masks.
Yeah. So Ricky just got canned. So that little Nightbot thing did its job right there. That was awesome. And then Jennifer came in and just told Ricky to stop. So
is Nightbot not a real thing?
Nightbot is not a real thing. It's like artificial intelligence. It's a real thing. It's a real thing. It has commands built into it. So it will do things based on what you program it to do, but it's one of those things that I'm just trying to figure it out, just because I'm trying to wade through the way this whole thing works with comments and all that good stuff. But with the spamming and the caps and all that, it will do your work for you.
I'm such a noob. Can I just tell you, I thought Nightbot was just like a super fan of everyone's real estate channel.
Too funny. That's hilarious. Actually, it came from Kyle Seagraves when the house you left.
Javier has it, and Kyle has it, and you had it. And I was like, God, this guy's like a super real estate fan.
No, that's Jennifer Lego. She is the super real estate fan. She's like the best in the biz here, and she moderates on all these channels just for sheer joy. She's like the guru. She probably knows more than all of us because she's on every channel.
Heck yeah, Jennifer. I love it.
There you go. So I want to get your thoughts here, right? Yeah. I think most people here know my thoughts on the market. If not, they clearly don't follow me at all. So you can just disregard the beginning of the because I don't think it's necessary. But considering selling now because they think maybe running into a slowing market, outlook for 2022. So you mentioned potential inflation on your side, which you think might be inflation running into next year. What are your thoughts on the housing market? Now, I know you're right. Let me preface this with saying all real estate's local, right? Most of us aren't looking at real estate from a bird's eye view of the entire United States. We're really focused more on our markets and our areas than we are everything. But with that said, what are your thoughts on housing for the next year or so?
Okay, so this is a really loaded question, and my answer kind of changes on this periodically. But essentially, we are in a shortage of housing, period, the end. So back in the 70s, there was an actual decrease in the number of births for a certain number of years, and that was our Gen X. And then millennials are the largest generation that we have right now. And they're now at the age where they're buying homes in large amounts. Their average age is 33. They're increasing family sizes. And so they have a necessity for housing right now. We also have an aging population that can't afford to move out of their houses. So a lot of the inventory issue that we have right now is because 1 in 3 homes is owned by somebody over the age of 65 who hasn't moved in with family or moved to an assisted living facility or gone to a 55 and up community, right? Like that's the truth.
Yep.
And so in order for there to be a slowing housing market, something has to change with supply and demand. Now, for me, I think affordability is going to impact a lot of buyers. And because of that, I think that we'll see it become a lot more buyer friendly because there'll be less competition. But it doesn't change the fact that we still have really low supply for the number of actual human beings that need housing. And it also, like in general, because I get asked this question a lot about whether or not now is a good time to buy with how competitive it is. Guys, rental rates are through the roof. They're actually increasing at a faster pace than home appreciation.
Right.
Like the average person's mortgage is $1,800. The average person's rent is $1,950. It's like $150 more. It's like, I don't know what to say. Like, I know that if you buy a property now and keep it for 20 years, the chances of you doubling the value of that house is very, very high. But so that's my overall thoughts on everything. I can't tell you what will happen in August 2022. I'm not that good. But I think that something has to change drastically to increase the supply for this to really shift.
No, I don't disagree with anything you said there. In fact, I agree with most of it. You know, the other thing I will bring up is the only other thing that can change, right, is supply and or interest rates, right? So interest rates are going to affect buyer demand one way or the other, right? If rates go down, buyer demand in theory could pick up even more, because even if home prices go up and rates go down, that affordability is level, or maybe it picks up a little bit in some cases. That's essentially what we saw in 2020. With that said, where do you see rates going, right? We talked about a little bit about rates at the beginning. You know, you mentioned, the 10-year move today, rates changed 0.25% or so across the board. What are your thoughts on rates through, let's not even go a year, through the end of the year? What do you think rates look like?
I think rates are increasing. I do think that for the short run, inflation's a really big deal. And I think that the only mechanism they have to control it, aside from the Fed buying mortgage-backed securities to keep rates down, is to raise rates. So I think rates are going up, guys. Now, I think, though, also that when supply chain corrects itself and we have more people back to work, I think that corrects itself. So I do agree with the Fed that this is a short-term problem, but I think it's a 6 to 9 month problem. And this is when you guys are buying houses. So we talk about today. And so today I think rates are going up.
Got it. And when you say go up, today they're sitting what? Just over 3%?
I think we're looking at high threes, maybe low fours by the end of the year. I don't know, guys. I mean, truthfully, you know, I can tell you that historically, summer times rates go up in general because normally Q2 data is pretty strong. I mean, that jobs report really caught everyone off guard. So it's like, I don't know, maybe we have like really shitty Q2 and then this is all for naught. But I do think this, guys, I think that there's a lot of variables all the time in every single market, and you buy when your budget is ready for it to buy, when you can afford it, when you have reserves, and you sit on it for a long time. Like if you're somebody who's buying now anticipating to sell in 3 to 5 years and making bank, I cannot guarantee that for you, and I have no idea. But I know that if you own a home for a long time, like I bought a house in 2006 at the height of the market, that house is literally worth double. And it would have seen the peak and the worst bottom.
Oh, absolutely. You bought it in 2006. There was a point in time where that house, if it was in Arizona,
it was worth $33,000. I bought it for $168,000, guys. It was worth $33,000.
Yes, it got hit hard. So yeah, I mean, I disagree with the interest rate comment, and no sense for a debate, but I mean, we talk about it a lot here. I just don't think rates can go very far just because of what is on the line with regards to the economy, with regards to the amount of debt and stimulus and all of that has to be repaid. You know, it's.
But what is a lot? Like
30 trillion. I mean, we're talking.
No, I'm talking about what is race. Like most economists predicted at the beginning of the year, most of them, except for the guy who runs NAR, predicted that interest rates would be in the high threes, low fours.
Right.
I was one of those people that was like, nope, the Fed's going to come in guns a-blazing, keep them down. They'll be in the low threes to mid threes. That was what I had said. But we weren't at a position that we are in now, right? And I think that we have lots of variables going on. And like, it's just like the only way to control the cost of all goods is to slow the demand. And I know I hate to say that. I don't want that to be true. Guys, I want there to be refinances. Let's get real. Like, it does not make sense for me to say this. Like, I definitely don't want
I get it. I mean, yeah, you're being truthful and transparent. That's what you need. I mean, when I say a lot, I'm saying I don't think you'll see rates. I think average probably 3.5%, maybe. I mean, I don't think they can go very far. I mean, and when I say far, I'm talking 0.25% move either direction, really at the most, just because there's too much on the line. And I do, while I agree with what you said about slowing everything, I don't think the government wants to slow things down. I think they want to see big numbers with regards to, regardless of how you view politics one way or the other.
Yeah.
Big numbers on employment, big numbers on CPI, big numbers on, all of those factors, makes them look like they're doing their job. And so if people are out there spending money, it's doing what it's intended to do, right? That the stimulus was meant to be spent. It wasn't meant to be put in a savings account and kept. While many of people should have done that, that's not what most people will do, right? They will go out and they will spend it in the economy, and it will continue to push things along. And I think, California is not open yet, right? I mean, we're still at 50% occupancy or so. I mean, in theory, we're at 50% occupancy. So June 15th, the state opens up, right? Disneyland's still 25% capacity. Imagine what happens when, you're able to go and travel and you're able to go and do these things. There's a lot of people. I mean, I think there's a lot of people wanting to spend money. I mean, I was in Arizona, and what we had to do, even though Arizona is pretty open with regards to the state, for this conference, we all had to get rapid tests. We all had to do all of these factors just to be in the room. And a lot of people didn't come because they were scared, for one, because of the pandemic and everything surrounding it. They just didn't want to be around that many people, for one. But also, you had people that just didn't want to deal with masks. They didn't want to deal with all of that stuff being in a conference environment and what have you. So the way I look at it is, once things open up, you're going to have almost like a resurgence of people out spending money. And I think, again, on inflation, it's going to look
decline inflation. Help me.
Well, it's not. It's temporary. It's not going to last forever. In my opinion, it's going to be a short burst, right? People are going to spend this money. They're going to get their fix, if you will, in being able to travel, being able to do what have you. And then at some point, those numbers start to regulate. People aren't going to spend money forever. At some point, it's gotta mitigate. But again, I mean, what do I know? I'm just.
No, I want you to convince me, truthfully, because I want the latter to be true.
No, and again, I
saw it today with the Fed. The Fed went and bought a bunch of things to try to stabilize rates. They really did. I agree with you that they don't want rates to go up. I just don't know that it's in their control, and I really want you to be right. Like, I want you to be right.
Well, I don't know that I'm going to. I just don't think things can go. I don't see a lot of change happening in the market personally. And this is not
Ricky
just
Jones is back. Oh
no. Who's back?
Ricky Jones.
Uh-oh, Ricky, you're about to get booted again. Both of us need to grow. I think he said mint up. Oh, Ricky, you're going out here shortly.
I'm the only person who really loves hecklers. They make me laugh so much.
I don't like the way this chat moves. Unfortunately, like a lot of times it moves so fast in different ways that I'm still up reading a comment at the top by the time the person at the bottom made 10 comments and got booted. So I have no idea that they were even there to begin with.
Sorry. Let's go on to the next question.
Who does?
Oh, did you want to move on to the next? I feel bad.
Oh, yeah. No, we're all good. And I know your time is valuable. So if you need to jet any point, feel like you gotta to do your thing. So don't Don't feel bad about leaving
I
us
am
all.
thirsty, so I'm going to drink my gigantic gallon of water, guys. Don't judge me.
You should. There. Look at that. Oh my God. Look at that thing. What is that? That's not water. It's like fancy
I
water.
put fruit in it because I'm not a good water drinker, but I am 4 hours behind. It like tells you when to drink water. I'm at noon.
Oh, yeah. You're going to be getting up all night using the bathroom. Let's see here. Going back through some comments. So follow up with what Lizzie said a moment ago, Darren saying, looking at rental competition, 20 plus applications for every rental house. I mean, it's crazy. I mean, I'm seeing it in my market too, not necessarily rental. I don't deal with a lot of rentals, but I do have people reach out to me occasionally asking about rentals, and there's nothing available. I mean, there's literally nothing on the market that is worth renting available. Everything that's good goes quickly. And you have people willing to pay a year in advance. They're willing to do things that, again, has never been common in the rental world. People are willing to do it because they just are trying to set themselves apart and get a property. No different than buying a house. And anyway, I'm laughing here at the comments.
The chug it, Lizzie. I know.
Well, that one, and Jennifer just booted Ricky again. So Ricky's been eliminated. It would be very difficult to wear a mask and do this, because I think people, the read the lip thing is real. All right, here. So maybe we'll go to an hour and a half. How's that, Lizzie? Okay. And then you can, I got 7 more minutes and you can chug that water.
Awesome.
All right. So Daddy Daughter Gaming had a question. Let's see here.
Any tips for a new loan officer?
Oh yeah, there you go. I saw that one earlier. I wanted to click on it. So somebody interested in being a loan officer, thoughts on clients, reach more people, buying leads. What are your thoughts on being successful as a loan officer?
So fun fact, Jeb and I coach with 2 different coaching programs that started from the same coaching program. And so we're going to preach the same thing. So it's about so here's what I would recommend. Get 300 people that know and like you, and then rank them by their influence and how much they like you and how much you like them. And then concentrate on the ones that you like the most, that like you the most, that have the most influence, and start figuring out how to provide them with value, things that will help them with their business, help them with their finances, help them eliminate some stress in their lives, and be consistent every single week. I would prospect 2 to 4 hours, anywhere between 25 to 60 contacts a week.
Yeah. So what she said in very layman terms is relationships. It's all about relationships. It's about dealing with the people that know you, like you, trust you, and not using those people, but deepening relationships. And through those relationships, you'll get more business, right? I mean, my business as a real estate agent believe it or not, isn't built off YouTube business, right? It's 95% past clients, friends, family. That's where the bulk of my business comes from. Now, occasionally I get deals that people find me online, or somebody comes through YouTube or what have you, but that I'm not counting on these sources to make my living. If it would be a really sad bank statement if I was counting on these other avenues to pay the bills. I'm trying to deepen relationships always, and not because I'm looking for something from people. It's providing value. Lizzie said it. It's all about providing value to other people, and with that, and helping those people when they need it, maybe when they don't need it, and through that, your business will grow. Right? Focus on those people, and yeah, that's where I'll leave that. Anyway, will Tesla accept Dogecoin?
Guys, I have no idea, but I can tell you that home loans will not accept your Dogecoin. So there's that.
There you go. Will Tesla accept Dogecoin? Yeah. Yes, I think so. Listen.
Well, doesn't he own Dogecoin or whatever?
Well, he doesn't own it, but he's a big promoter of it at the moment, right? He's one of the
yeah, but didn't they find out
heads.
he secretly has some investment in it?
Yeah, I mean, he's pretty well known that he's out there putting his money in it, and they're already using it to. I think he said that they were going to finance the next space shuttle mission or something off Dogecoin or something. So I think the reality is, yeah, I think you'll be able to, but will it be worth anything then? I don't know. I've got a really bad story about Dogecoin that I don't really like to talk about, Lizzie, and it's because every day I see it go up, and me and a buddy kind of made this pact that we were both going to buy it, and it was like 4 or 5 cents at the time, and he went in and bought it, and this was like throwaway money, right? We were going to go do it, just whatever, and if it goes to $1 million, like great. Weren't selling it before, and I went to buy it through a regular investment account like Fidelity and through Webull and another platform, and none of them allow crypto. And so I reached out to him, and he's like, no, you got to go through Robinhood and whatever. And I was like, I'm not opening another brokerage account just to buy this crap. And so I did it. And I swear to God, within a week, it was at like 30 cents. And I'm like, what the hell just happened? And then it just completely went up from there. So I got this, I'm not really happy about it. And
Well,
it was really just for fun. Like I don't like have any regrets, but I'm a little ill towards
Warren
it.
Buffett's not buying any crypto. So
He's not. And I swore for the longest time I wouldn't either. But I'm starting to I still don't
Can I say
understand
something
it.
about this whole thing really quickly? Because we have a lot
absolutely.
of people on this.
Let's
Okay.
go.
So one of the things that drives me insane about human race is that everyone just does what their neighbor does.
Oh,
Okay?
1,000%.
That's why Dogecoin is having its moment right now.
Oh, for
Just
sure.
like GameStop had its moment. Like the majority of people are always willing to do what the majority of people are willing to do. And so that saying is like, hey, if your friend jumped off a bridge, would you jump off a bridge? Like, do not buy and invest in shit you do not know.
Oh, I don't disagree. I couldn't
It's
agree
not for
with you
you.
more.
I mean, but I mean, people who watch our channels, they depend on us. And you hear tons of like YouTubers promote it and talk about how much money they've made. And everyone's talking about how much money they made. There's a really, really famous quote. And I know it's by one of the Kennedys. And it was right before the Great Depression happened. And it was about like when your shoe shine boy starts giving you financial advice,
Yep.
it's time to get the hell out.
Yep.
And it's like,
That's exactly when they started giving you stock tips. It's time to be out of the market.
yeah, I mean, obviously he didn't say get the hell. I mean, obviously I'm from Nogales, Arizona, so this is like it,
No, hey, listen, I am merely being funny with the comment. I don't understand it. I've asked people to fully explain it to me. Nobody can do that. No, but it's yeah. Again, if you're going to do it with money that you don't care about losing. It's a gamble. That's where I'll leave that. Hector just got Hector is spamming emotes. I don't know. Like this thing is like got a mind of its own, people here.
It's suboptimal.
Yeah. Too funny. And Joey Crack, one of the regulars here, just summed it up and said it's FOMO, and it is FOMO. That's exactly what it is. And there's a little bit of that playing into the housing market as well. So it's a little bit of the FOMO is driving the economy at the moment. That's you think about that. That's not good.
There's
that's not good.
The Psychology of Money. It's so interesting.
The Psychology of Money.
Mm-hmm.
I've read it. Yeah, no, it's good. Matt, the mortgage guy. When your waiter is also a loan officer, run for the hills. Circa 2008. Yeah.
Well, you have to start somewhere. Truth be told, guys, I did apply at QT gas station at the very beginning of my mortgage career because I wasn't very good at selling and wasn't very good at providing value.
No. Hey, listen, again, you do have to start. But that was how long ago?
Thankful for my Brian Buffini seminar. It changed my life. Seriously.
Yeah. No, that's awesome. Yeah. No, mine as well. And I'm still doing it today, which is great. Lizzie, anything you want to throw out there? Any parting words, any advice, anything really?
Guys,
promote yourself.
It's an aggressive market. It's tough right now. Stay focused on your budget. Seriously, learn to live off 70% of what you make. Figure out how to use 20% to do debt reduction. If not, focus on investing and then do 10% towards a rainy day. that formula, guys, will win in any economy under any circumstances. And it's the right thing to do. And over time, you will win. Like, follow the people who've tried and true. Like, Warren Buffett is the tortoise of finances, and he is like literally one of the richest, most smartest people out there. So,
absolutely,
yes,
I agree. So promote yourself here for a moment. Where can people find you?
Yes. So guys, you can go to my YouTube channel. I'm all over the internet. I do have a budgeting app coming out that you can sign up for. We're in beta right now, so it won't come out until next year, but it's all on budgeting and figuring out what you can actually afford in home ownership and then just, in regular life.
No, awesome. Appreciate you being here. I know it was short notice. I kind of sprung this on you, Monday?
Yeah.
Monday. So, I do appreciate you being here, providing a lot of value, educating buyers, empowering buyers, sellers, all that good stuff. I mean, that's really, again, what the channel is about, is helping people. So thank you. If you guys are still around watching, hit her channel, hit the subscribe button, like this video if you haven't already, subscribe if you haven't already. And I'll be here next Wednesday live again, bringing you, regular content, and hope to see you guys again at that time. All right, Lizzie.
Thanks,
Adios.
guys.
All right.